Former U.S. President Donald Trump has addressed his supporters, voicing victory over the 2024 U.S. presidential election. That being said, on Press Perspective today, we delve into the economic implications of his return to the White House for South Korea and beyond. Hello and welcome to Press Perspective for this Thursday, November 7th here in South Korea. I'm Min Sunhee. Now, the term tariff was much touted by former U.S. President Donald Trump on his campaign trail, and given his expected return to the White House next year, today we touch upon the economic impact of the incoming U.S. administration on South Korea. For this, I have Lee Ji-hoon, a correspondent for Reuters, here in the studio. Ji-hoon, it's a pleasure to have you with us.
Thank you for having me.
I also have Professor Kim Yong-jin at Sogang University. Professor Kim, welcome to the program.
Good evening.
Right. We'll start here in the studio, Ji-hoon. Let's start off with the latest trends on global financial markets, including that here in South Korea.
Yes, so since October, global financial markets have been pricing in the likelihood of Trump's win a little by little already, with so-called Trump trading. In the bond market, for example, U.S. Treasury yields rose sharply in October, with the 10-year yield at around 4.3%, which was a 3-month high. And that pushed up the dollar index by more than 3% in October, which was the biggest monthly increase in 2 years. Because it was seen that Trump's policies of immigration and imposing tariffs were seen as likely to spark inflationary pressures in the United States. And that had impact on domestic finance markets as well. For example, the dollar-won rate, which was around 1,300 in late September, rose sharply to 1,390 in just over a month. And in the stock market, the Kospi fell for the first straight month, and despite U.S. stocks trading at record high levels already, because there was uncertainty over U.S. elections, of course. But then analysts also said Trump's America First policy would likely boost U.S. stocks while making non-U.S. markets less attractive. Yesterday, starting early trading hours in Asia, Trump started to take a little lead in voting regions, and Trump trading became more evident across global financial markets, especially Asia. The dollar-won exchange rate for the first time since April rose above 1,400, which is a psychological barrier. And then in the stock market, stocks of automakers and battery firms, they fell sharply because of worries that Trump might impose tariffs on South Korean vehicles, and because Trump was seen as less supportive of, how I should say, climate-friendly policies like subsidies for electric vehicles. And that is why South Korea's automakers like Hyundai Motor and battery makers like LG Energy Solution, they fell sharply yesterday.
Right. So some of the key words in the financial stock markets across the globe appear to be Trump trading and Trump tariffs then. Ji-hoon, you recently covered Korea's export growth for the month of October, which fell tangibly, of course. Now, pundits here, I believe, are linking this particular performance in the month of October to U.S. politics. What more can you tell us?
So in October, South Korea's exports fell rose for the 13th straight month, but the growth rate weakened sharply, and it was the lowest in 7 months. It had been expected that growth would weaken as we head towards the end of the year because of base effects that would negatively affect annual comparison, but still, it was much weaker than market expectations, with the growth rate at 4.6% compared with 6.9% seen in our survey. There was a pickup in exports to China. A breakdown of the data showed to the highest in 25 months, but exports to United States were rather weak, growing only 3.4%, which was the slowest since last August. Economists said there was weak recovery in Chinese demand thanks to hopes around recent stimulus measures, but demand in the United States was subdued because of uncertainty over U.S. elections. Then that came despite a recent rate cut by U.S. Federal Reserve in September.
Right. And Professor Kim, I'm wondering, is this reality of slowing exports a broader phenomenon affecting other countries as well, or is it just South Korea? Is South Korea the only one witnessing this particular reality?
Well, I think the slowing export of Korea would be the key signal of global economy downturn. Usually the Korean export was the very important signal for global economy because we export a lot of the part and middle, product. So the International Monetary Fund estimated the growth rate of the world economy would be 3.1% this year and next year, which is lower than that of pre-pandemic era. The reasons are a lot, include high interest rate, broader geopolitical tensions, and regional conflict, a possible resurgence of financial market volatility with adverse effect on sovereign debt market, a deeper growth slowdown in China, the continued ratcheting up of protectionist policies, renewed spikes in commodity prices, intensifying debt threats in emerging market and developing economies. In addition, many countries suffer aging population, weak productivity, and extreme policy uncertainty. About 64 countries, which represent about half of the global population, have or will have newly elected government in 2024. In this situation, how could the world economy grow? And these factors also affect the slowing growth in rate of Korean export, and it probably will be worse in the next year. What I'm saying is that Korea is not the only country that experiences a low growth rate in export. Of course, some of the structural issues of Korean industry, like heavy reliance on several industries of semiconductor, automobile, shipbuilding, and chemicals, which might be affected by the global economy the most, may affect the low performance in Korean export.
Right. Meanwhile, Ji-hoon, the U.S. election on November 5th also decides which party holds the reins of each chamber of the U.S. Congress. Now, that being said, how does that reality look to affect the policies of the president moving forward?
So if we go back to Trump trading, U.S. Treasury yields have been rising because there were expectations that U.S. fiscal deficit would widen because of Trump's policy that promised tax cuts and more spending. And now with the Trump being elected already and the Republicans already won the majority in the Senate, the key will be whether the Republicans will win in the House of Representatives, and which many analysts and pundits call it a red sweep. So they will be key for Trump's economic policies, especially the House of Representatives, because the House is in charge of approving government budget, and that will determine if Trump can proceed with his promises of tax cuts and more spending to boost the economy.
Right, and staying with Mr. Trump's pledges, Professor Kim, now, Mr. Trump, he voiced opposition to President Biden's Inflation Reduction Act, but to root it out, he needs congressional support, of course. What do you believe are his chances of abolishing this act? Of course, keeping in mind what our Ji-hoon has just said here in the studio.
Well, his chance of abolishing the act is very high. Mr. Trump is known to be a strong disbeliever of, climate change. He withdrew from, Paris Agreement in 2017. At the time, he said that he withdrew from the agreement to protect the U.S. and the U.S. citizens. The focus of Inflation Reduction Act is not only on inflation reduction, but also on investing huge money in developing climate technologies and supporting the economy for the transition to the net zero society. He does not seem to support the policy. And then the recent election results look like to help him do whatever he wants to do. Probably the Republican Party may hold the reins of both chambers of the U.S. Congress. Or absolutely, we have to see what will be happening in House yet. But yeah, that's likely. With a victory in the election, he will absolutely abolish or weaken the Inflation Reduction Act, as well as the most important act, we are concerned is CHIPS Act, that also too.
Right. Ji-hoon, moving forward, the U.S. Federal Reserve is soon expected to share its latest monetary policy. Now, there are high expectations, that is, for yet another rate cut, regardless, of course, of the politics in the U.S. What is your outlook?
Yeah, there is market consensus that the Federal Reserve will lower interest rates by 25 basis points at the meeting ending tomorrow, Seoul time, and after a bigger than usual 50 basis point rate cut in September. And most economists expect the Fed to cut rates again in December by 25 basis points and more next year to bring down its target range to the 3% range from the current 4.75 to 5%. When it comes to implications, of course, different economic policies mean different economic conditions. So, and both candidates, both Trump and Harris, prior to the election, they promised policies that would spark inflationary pressures, but many analysts said Trump's policy would more likely spark more inflationary pressures. So there is a possibility that Trump's policies, if implemented, would delay Fed's rate cut cycle next year. And financial markets these days, or yesterday and today, it seems they are already pricing in a slower rate cuts by the Federal Reserve with the end of the rate cut cycle approximately 1 percentage point higher than what had been expected in dot plots projected by Fed officials in September.
Right, I see. Meanwhile, Professor Kim, what would be the impact of the Fed's policy direction on the Bank of Korea's monetary policy?
Well, like Ji-hoon mentioned, U.S. Fed would be trapped in very difficult situation next year, but at least this year, they are expected to cut, the base rate, twice. So, this year's policy is very clear, but next year we don't know due to, newly elected President Trump's policy. But anyway, if the Fed will cut the rate twice this year and by 0.5%, which will make the rate 4.25 to 4.5% at the end of the year. In this case, the rate gap between Korea and the U.S. will be 1 percentage point. This gap may allow some room for the Bank of Korea to cut the base rate by 0.25%. The problem the Bank of Korea faces is not the consumer price or unemployment, but higher volatility in the financial market, like foreign exchange rate, which is happening after, Mr. Trump is re-elected as the president. Even though the increases in consumer price and household debt are low and stable, and there are some concerns about economic slowdown in Korea, the Bank of Korea is expected to keep the current rate, base rate, same, because it needs to check the effect of the last rate cut, in September on the economy and consider the increasing volatility in the financial market.
Right, lots of factors to consider then. Ji-hoon, an exclusive report by Reuters earlier claimed that, and I quote, China is eyeing $1.4 trillion in fiscal stimulus and even more if Mr. Trump is elected. Could you tell us a bit more about this particular coverage?
Yes, so recently China has been building several stimulus measures to prop up its economy, which is expected to underperform its target of 5% annual growth this year. And according to our report, China is expected to announce this week after its important policy meeting that it will inject $1.4 trillion to support the property sector and local governments. And so about more than half will be to help local governments reduce their debts, and the rest will be to help construction sector already having a hard time with high debt. But many economists say, although this is a very huge amount figure-wise, but then these measures are seen more as stabilizing measures rather than measures that are boosting demand in China. So in terms of implications for South Korea and the global economy, we will have to see if it really boosts consumer demand in China and global trade. Yeah.
Right, staying with that, Professor Kim then, how does the size of China's fiscal support plan look to affect South Korea?
Yeah, I mean, in general, the answer would be the more the size of China's fiscal, support, then it would, have more effect on Korean economy. Because, China is one of the largest trade partner of Korea. And also, if the money, Chinese government money goes to like real estate and the construction, which have imported Korean materials the most, so Korean economy would be helped. Basically, China's fiscal support will help Chinese people and companies purchase more from Korean companies. However, I don't like, say however, but we have to think about that, right? However, considering the fact that Korea's auto and electric vehicle battery industry have become a large importer of few materials, raw materials from China, while China has, steadily cut back on import from Korea in favor of domestic industries, which resulted in the trade deficit of Korea with China in 2023, the stimulus package may not have much effect on Korean export. One more thing we have to think about is that the competitive advantage of Chinese industry and companies increases dramatically recently to compete with Korean companies in most areas of trade. The Korean economy may not enjoy the benefit of the fresh stimulus.
Right. Ji-hoon, aside from the U.S. election result then, what other factors look to affect the global economy down the road?
So, of course, we will have to watch how Trump's economic policies actually turn out next year, because many market watchers have said during the first presidency of Donald Trump, many of his actions actually turn out to be much softer than his words. So we'll have to see if those tariffs and those kind of trade barriers, we'll have to see how they turn out. And then Other than that, of course, we have geopolitical events going on around the world, especially the war in Middle East and even the Ukraine war and North Korea's involvement. So many policymakers are saying these geopolitical events are raising uncertainty over exports, global trade, supply chain, and especially energy supplies for Korea. So we'll have to watch how these events unfold because these events cannot be predicted by anyone.
Right, so time will tell us then.
Yeah.
All right, Yoon, thank you so much for your time and your thoughts today. And Professor Kim, thank you very much for your insights today.
Thanks for having me.
Right, well, that ends this edition of Press Perspective. Thank you for watching. See you same time tomorrow.